I often say in Stocks to Trade Pro, look at charts till your eyes bleed. You'll hear almost every trading instructor say, look at charts, look at charts, look at charts. What does that mean and how do you do it and how do you get started? That's today's video. Hey everyone, Lead Trader with Stocks to Trade, Tim Bowen here. Be sure to subscribe to our channel for more videos like this, and also ring that bell, hit the alert bell. We do a bunch of videos every week where we're talking about psychology, breaking down charts, and we also go live every week. And I really want you to catch those live videos, so ring that bell. Today, we're gonna be breaking down a chart, one of the best easily chartable stocks that I've seen in recent history. It is ARQL. You'll see it's on my screen right here. What do I love about this? This is a very smooth, slow-moving stock. Now, do not misconstrue slow-moving. Slow-moving stocks, slow-moving tickers are great for small traders and part-time traders. I'm guessing a significant majority of you are probably part-time traders. That's why you're looking at these videos, looking to learn. Slow-moving stocks are great because if you gotta leave, if you gotta do the day job, if you gotta pick up the kids from school, they don't make the crazy volatile moves. So there's a few concepts we're gonna talk about. A lot of newer traders will strictly fixate on the intraday chart. Okay, a few terms just to break down. The intra with an A chart is just today's chart. You can see on my screen I've actually got a 2-day chart. I'm going to break that back to a 1-day so you can see exactly what I mean. I mean, this is just today. You see pre-market, you see them through the day. We're roughly 2/3 of the way through the trading day, and then you would see after hours if we were here after hours. But this is the intraday chart, and that's what so many new traders focus on, is they only look at today's information. I want you looking at multiple time frames, particularly the 1 year, 1-day chart, as well as the 1 week, 5-year chart. So let's jump over to the 1 year, 1-day chart here and kind of talk about this and why I like this setup so much. So you can see that this stock kind of did nothing for most of the latter part of 2018 and earned into the beginning of 2019. Then we get a high volume gap up on news in March. They had I believe an FDA announcement without pulling from memory from a few months ago. Notice how the stock gaps up, consolidates, and then re-breaks out. Consolidates, re-breaks out, consolidates, re-breaks out, okay? That shows you, so let's say you can see the stock's hitting all-time highs as of today, but let's say we were tracking this stock, say we missed this initial move, and we even missed the second move. So we're looking at the chart right here. We now know that this stock has a history of breaking out after it consolidates. So this is something that we're gonna put on our watch. We know that after it breaks the previous highs, so in this situation, March, it went from 550 to 7, then later went from 7 to 9, and then now has gone from 8 to 11. So remember, in charting and in stocks, history doesn't repeat, but it rhymes. These stocks that make multiple moves tend to continue to make multiple moves. So I want you to look for these stocks that have that past pattern of spiking, consolidating, and re-breaking out. That's one of the biggest things that's going to help you find the next best stock. So how do you do that? How do you break that process down? Well, you're going to do it with your daily screeners. We talk about these in stocks on these YouTube videos all the time. You're running those scanners to find those big percent gainers of the day that are closing near the high of the day. That's back to the intraday chart. You have unusual volume, you have a strong stock, a big percent gainer with news closing near the high of the day. Write all of those down. Then, as you can see, ARQL is 5 cents off the high of the day again today. It's about ready to break out again, this has been one of the best stocks of the summer so far. So now, maybe you never even traded this. ARQL qualifies. It has news today, 627. You can see there's news. You might not be able to see it, but I can see it. You might not be able to see it on YouTube. Has news today, closing near the high of the day, breaking out on the intraday chart. Then I flip and I can see that it is now consolidated for a few days and is getting ready to break out, okay? So use those multiple time frames. That's one of the biggest things you want to do. You're going to find the stock on the intraday chart. So you're going to be, basically what you're doing is you're finding ideas on today's chart. Then you're confirming that idea on the 1 year, 1 day and the 1 week, 5 year. So that tells you that there's past performance here. This isn't just a random spiker. Then you flip back to the daily chart, 5 minute, 1 day, and you start making your trade plan. That is what we call using multiple time frames, and that keeps you out of mediocre trades. So many new traders trade off the 1 day chart, today's chart, and they don't look at the daily, and they miss the forest for the trees, as the old saying goes. So, hope this was helpful. Let me know in a comment below. Do you use the 1 year and the 5 year chart? Do you strictly stare at the intraday chart? So I'd like to know. As a day trader, I think use multiple time frames. What time frames do you use? Drop me a comment below. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out Stocks to Trade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.